The dream of mass adoption, the promise of revolutionary tech, but for Cardano holders, there is a storm brewing on the horizon. Is the dream for Cardano over? In this video, we explore the factors that could see Cardano ADA's price plummeting. Guys, let's get into it. So let's start with the good news. There is a key metric flashing a hidden signal. Cardano's supply in profit is low. Could this be the buying opportunity that you've been waiting for, and is Cardano ADA a good investment right now? Cardano has been in the news a lot lately, and there's lots of speculation about its future. Some people believe that Cardano is undervalued and is due a price increase. Others are, of course, more cautious. One metric that analysts are looking at is the supply in profit ratio. This ratio tells us the percentage of Cardano's circulating supply held by investors who are in profit. In other words, tells us how many people are holding ADA purchased at a lower price than the current price. Well, according to this article, the supply in profit ratio for Cardano is quite low. This article suggests that only 51% of Cardano holders are sitting in profit. This could be a sign that investors are looking at Cardano as undervalued and believe that the price is going to go up in the future. However, the article also points out that Cardano's ADA is very far from its all-time high. And although the supply in profit ratio suggests that there might be a price increase in the future, nothing is guaranteed. So what does this mean for you? Should you buy Cardano? Well, that's a decision that you're going to have to make for yourself, but hopefully this information has given you some food for thought. Okay then. The bad news. Unfortunately, although the news between the supply and profit ratio and some of the other fantastic things that we see in the space are great, there is, of course, the technical analysis. The technical analysis for Cardano's ADA doesn't give us the same level of hope. Let me explain why and what is going on when it comes to the Cardano price action. So here we can see that Cardano's price has slipped down quite a bit. Right, we have seen this drop of 50.72% since the 14th of March to the 13th of April. We have, of course, recovered a little bit. We rallied up and found resistance, but it was a 30.62% rally. We found the resistance on the 200 exponential daily average, and this is really important to understand. That 200 daily EMA is a big area of resistance for Cardano's price. The 200 daily EMA is your trend filter. If price is lower, you're bearish. And if you can rally above and get a close position above the 200 daily EMA, well, things are bullish. For Cardano's price action, however, we are, of course, finding the 200 EMA as resistance, and this is a problem for Cardano's price action. Considering our structures here, we have to consider a move down towards the 35 to 38 cent level. This would hit and cross our 1.618 Fibonacci level, and that would then mean that we'd have even further to the downside afterwards. Now, following on from the previous video that I did, I still see this as an irregular flat correction, meaning that I'm not looking for us to come down into new bear market lows, but what I am looking for is a completion of this pattern. And the only way to kind of break free of this bearish structure is to, of course, rally up higher than 55.93 cent. Okay, and I've marked that on here with this little dashed line in the middle. Okay, so let me show you why that is. Here we have the idea of a 5-wave movement to the downside. We want to break this. In order to break it, the wave 4 has to cross wave 1 at 55.93 cent. Now, obviously, with our 200 EMA being our resistance and our 200 EMA currently sitting at 51.86 cent, it doesn't look likely that that's going to occur. Okay, so this is a huge problem. Now, this is also would basically only be a wave 3 as well. So if I show you this is a wave 1, this is a wave 2, all this 5-wave movement here would just be a wave 3. We'd bounce up for the wave 4 and still have a move back to the 5th wave, final 5th wave in my opinion, to finish off the pattern. The pattern in itself would be an irregular flat, as I said, an A, B, and C pattern like this, and it would be pretty disastrous for retail investors. So although we've got some really good things going on with the supply and profit ratio being above 51%, I expect that's going to actually drop down even lower signaling that Cardano is undervalued. So as I've said before, and I'll say it again in this particular video as well, this is the opportunity to dollar cost average as price comes down. At the point of recording today's video, we're at 47 cents, but my expectations will be that we'll be looking at the low 30 cents from the majority of the accumulation. Now, what does that mean? Does that mean that you should be buying Cardano right now? No, I don't think that's necessarily the best decision to make, but a dollar cost averaging strategy could be one that saves you countless hours of sleepless nights and so forth. If you were to slowly dollar cost average at 47 cents all the way down to 35, 33 cents, I think then you're going to be finding yourself with a really, really strong looking Cardano portfolio. Now you can let me know your thoughts on that in the comments down below, but that will be my approach to this. As we look to kind of finish off these structures, we would be looking to kind of dollar cost average heavier and heavier and heavier as we pull back. But 47 cents to me still feels undervalued, specifically as we were referencing the supply in profit ratio being 51%, is signaling that actually there is a lot more undervalued altcoins. It's like ADA here, right? We can see that ADA is undervalued in comparison to things like Bitcoin, which was 88% in profit, right? It's important that we understand that there's a vast difference between where some altcoins are sitting and where Cardano is sitting. It means that money might be rolling out of other altcoins into altcoins that are appearing undervalued, and that is where Cardano ADA sits. Now, what else can we use here to kind of help us understand whether or not this particular pattern and this bearish structure actually plays out and gives us that opportunity to dollar cost average? Well, we can take a look at smart money concepts alongside Elliott wave theory, and you can see that we are in fact in a bearish structure. We had this change of characterization that formed on the 13th of April. This was a change of its bullish structures. So on the way up, we had these bullish character change and break of structure to confirm that bearish, that bullish play. And then we can see that since we've had this 50% crash, we have seen a change of characterization to a bearish state of play. Now, we haven't got a break of structure to confirm it yet, but I do think it's on the horizon. If we were to come down and break its most recent swing low, you're going to get a confirmation of that, specifically if you get a closed candle down there. And anything lower than 38.65 is going to also hit that 1.618 trigger point as well. So it's going to be quite an interesting tell. Let's turn off the smart money concepts and take a look at the stochastics. Our stochastic RSIs are an indication of momentum in relation to price. Now, it doesn't predict price movements, but it shows you whether there is strength in its particular direction. So if, for example, we're in the high ranges of our stochastic, it shows us that things are overbought and momentum has the potential to shift on down. Price has the ability to go down because it is expensive. That's how the markets perceive it to be. When it's down at the low side, it is oversold and it is perceived as undervalued and a discounted price that you buy. Okay, now the stochastic version of the relative strength index is more sensitive to price movements than the relative strength index in itself. So it allows you to kind of take advantage of those real kind of smaller movements in the market. But again, it's no guarantee of a price movement. It's only a guarantee of the volumes and the buying behaviors that are feeding into the price chart. For example, a fast moving stochastic shows you weakness in a move. A slow moving stochastic shows you strength. Okay, so where we sit on this daily time frame is still with a pretty decent correction to the downside due. We're not overbought, we're not oversold. We could reverse here, but it does show us that actually, considering we've had a 50% correction, we haven't actually had any significant rebounds. Let me show you. This rebound that we've had at the moment, this little move of 30%, took us from the oversold to the overbought range on the stochastic, whereas we went from our high overbought to the oversold range on that 50% crash, and you can see that we actually came down. We rallied a little bit, tiny little bit on the stochastic, and then come down into the oversold area twice. Okay, so it's not a reflection of the price, but it's a reflection of the momentum, and we can see that there's a lack of momentum upwards and more of a momentum to the downside using the stochastic. So that's what it's showing us. It's also showing the same things in terms of overbought on the monthly, overbought on the 4 hourly. I believe it's just dipping down on the hourly at the point of recording. So we can still see that there's more momentum to the downside had here on the stochastic. The relative strength index is also lower than the 50 level, also showing that we're still in a bearish states of play. We haven't seen any decent progression upwards on the relative strength index, which is the yellow line that you see here as well. No divergences indicated either. The last one was a hidden bullish divergence. This one lining up with our little kind of rally up here for the wave 2. Again, didn't really amount to terribly too much, and you can see that we don't have as much volatility on the relative strength index as we do with the stochastic version of it. So we can see here that, yeah, we are unfortunately still looking for slippage to the downside on the relative strength index. I don't think we're seeing any potential rally just yet for that one. So all in all, it's not looking overly too strong for Cardano, either from a stochastic RSI point of view, an RSI point of view, an Elliott wave theory point of view, a smart money concepts point of view. There's a lot of confirmations here to say that things are bearish. And if you don't like any of those indicators, you don't like any of those concepts of smart money concept or Elliott wave theory, maybe none of those really work for you, you're lower than your 200 daily EMA. So it doesn't look strong for Cardano. Now, does that mean that you should be scared, you should be selling all your assets, you should just be out of Cardano, it's dead? No, I don't think Cardano is dead. I think Cardano is undervalued. I think it will have its time to shine, and everything that I've been talking about in today's video just shows you that we are getting ready for a huge accumulation before a fantastic run to the upside. As I spoke about in the previous video, which you can check out just over here, I was talking about how Cardano could rally to significant new all-time highs based on its history. Guys, check it out.